morning. This is Mr. Not Advice, and it is Saturday. Holy shit, 11/15, November the 15th. Got another week of trading before we start really calming down for the Thanksgiving holiday. Thank you, Mr. Billy Idol. I appreciate that. But we've got another week of trading really before the market starts shutting down. I know as a professional that I pretty much took off the whole week of Thanksgiving, and then I had 2 or 3 weeks of trading for Christmas, and then I was off for another 2 weeks. And that's the great thing about trading. You can do that. You can take the time off. Doesn't mean the market is completely closed, but it does mean that I wouldn't be surprised to see less volumes going into the market. We're going to make this very simple. Next week, it's all about NVIDIA, okay? The market has built itself up to the point where if NVIDIA, I'm going to put it in air quotes, beats, then the market will go up. What's the concern? Well, I don't know what the market's going to decide is the data point that they will define that it's a beat. That's number one. Number two, I also don't know if it will be enough to overcome what the current concern is, which is you've probably been hearing a lot about the AI bubble. Well, of course there's a bubble. There's always a bubble whenever a new technology is going to disrupt business. And 80-90%, I was telling my Fight Club members in a private call this morning, 80-90% of the companies that associate themselves with AI will not exist 5 years from now. So picking the winners is what's going on right now. Yes, we're seeing that volatility. As I've said in my end of the day reports, NVIDIA has been stuck for 4 months in this massive channel. And until we get those stocks to start leading again, it's going to be very difficult for the market to really make much traction to the upside, barring any other sector taking leadership. Well, we had leadership coming out of gold and silver for a while, but I'll show you here shortly how that leadership is the theme or the thesis around it has changed. It's no longer even at least it wasn't last week, a hedge against down market. So, and then we have the whole interest rate cut decision coming up. We had 4 or 5 Fed speakers coming out this week, and yes, it was purposeful that they are talking about once again inflation. I do not understand. I'd say for the first 15 years of my career, we never paid attention to the Fed. We didn't even know who the Fed was. When they would announce interest rates, it'd be one simple, comment on CNBC or Bloomberg, and that'd be it. And because of the 2008 collapse, you had all of a sudden the Fed and all those guys, right? They became almost like rock stars, and Greenspan was a big part of that too. But understand that interest rate cuts don't immediately affect the system. It takes time for that stuff, for that decision to work its way through our economic engine of America. One of the things I was very excited about was that with the government reopening, the federal government had built up over $1 trillion in its Treasury General account, which is like your checking account for those of you that used to have checking accounts. And if they're not paying bills, that Treasury General account's going to go up. That gums up the mechanics of the market, right? The gears of the market. So now that the government's reopened, that money will start flowing again. I think that's going to help start taking away some of the volatility in the market that was there because there was a tremendous amount of uncertainty when they were going to reopen the government. So when the government originally closed, I had said as long as they have this thing, it doesn't stretch to Thanksgiving. Well, they came close, 2 weeks, but then I think the market will be fine, and I stand by that. But we'll get into what I look for next week, but let's look backwards here at some macro data points here. So in the same vein or the same theme of the Treasury General account, all those dollars going back in the system is like a short-term quantitative easing. Well, when you're pulling, when that money's not present because the government shut down, it's like quantitative tightening. So I wasn't surprised to see some of the interest rates on the bonds move up this week. Makes perfect sense. And I would suspect that, barring anything else, those rates will start coming down again. Uh, the looking, the last, and I've made this comment multiple times, that since the crisis of '08, we've had just a record number of interest rate cuts. And that's what this is right here. Look what we have projected for 2026. So in 2025, we had 167 rate cuts with only 81 expected ahead. And already, this is globally, and central banks already on hold, or they're hiking rates right now. But here's the line in the sand. As long as the dollar, the DXY, stays below 100, no one fears tightening. But most of the easing globally is behind us. Okay. This is reason number one why Bitcoin's trading at $100,000. Unless we get further easing by the US government, by the Treasury, and the Fed, it's going to be difficult for Bitcoin to break out of this range. This does not mean that I think that money supply is going to start shrinking. No, if the interest rates get cut consistently, and depending on the size of the cuts, and the US is playing catch up in terms of cutting. So there is still cutting for the US to do. But there's also another function or item that's going to drive the market higher, and then that's true easing stimulus. And I believe there is stimulus that is coming. So I don't know what it's going to be. I don't know if it's going to be, rebate checks to consumers, because the consumers are a mess right now. And I'll show you some charts on that. But not only will we have lowering of interest rates, but we're also going to have easing. I believe that's what's happening. So, as I've been pointing out to my members, the Oracle situation, while it remains to be isolated, the fact that the Oracle credit deferred swaps are at record levels, primarily based upon the fact that by my rough back of the napkin calculations, they are now at 550% debt to equity. That is 5 times levered. Just look at it that way. 5.5 times levered to their assets. So very precarious situation. But as I've said before, I don't believe there's contagion risk. I mean, the market may sell off on that. I think the market this week was looking for a reason to sell off. They got it. The market is able to lock in gains. Okay. Retail remains bidding the market, but I don't see how this is going to continue to be a start of a larger downdraft. We'll have to see. NVIDIA may sort of tip the scales. I don't think so. But we will have to see. Bitcoin is at its most oversold levels in about, I don't know, forever. This is the gap between Bitcoin and NASDAQ. This has to close. One way or the other, this has to close. Now, it can close one of two ways, right? Time, NASDAQ coming down, or Bitcoin going up. I'm of the belief that Bitcoin's going to go up. I just don't think it's going to go up as strongly as it has in the past. But Bitcoin, Ethereum, I was happy to see on Friday that Ethereum decoupled itself from Bitcoin for most of the day. Ethereum was green while Bitcoin was, I think, down 500 to 600. So the line in the sand for Bitcoin remains down here. Unfortunately, we don't really have any support down until about 77,000 on it. It could go there very quickly. I've seen some reports of some major whales selling off on Bitcoin. As for our Ethereum position that we own, actually, I'll pause that. I'll wait till we get into single stock positions. Gold is now moving in the opposite direction of the VIX, where most recently gold was moving in the same direction as the VIX. So the fear hedge factor that gold showed in early October is gone. So it's no longer a fear hedge. I think that's fine. I don't think that gold is going to come crashing down. And we're actually looking to get long gold and silver. Because remember, I showed you last week that one of the best indicators to use is the gold volatility. And as long as that's rising, we are in a good spot in terms of positioning, because at least we know we're going to have somewhat of a tailwind behind us. Okay. The commentary from the Fed, I don't know why they're so obsessed with 2%. It's a ridiculous number. I think Greenspan was asked, where'd you come up with the number? And he gave his usual mumblefuck answer where he didn't really answer the question. So I don't know why 2% is such a hard on. Probably because that's what they've always modeled and that's what they were taught in their ivory towers. But in the real world, it is normal to have periods of higher inflation as well as lower inflation. You got to remember this always. Whatever the Fed says, it takes months for that to be leading the system. A interest rate cut is going to take anywhere from 6 to 9 months, 9 to 12. I've seen 9 to 18 by some economists. But my point is, it takes time. So the market triggers off of it, and then it takes time for that, let's say, stimulative activity to start stimulating at the ground level, businesses, jobs, all of that. So looking at this, let's see, the macro market imbalance. This is according to Goldman Sachs here. The macro and market imbalances that we saw then, particularly from 98 onward, are generally not visible yet. So people comparing it to the bubble, right? On many metrics, the current AI related boom has more in common with the tech boom in 97 than in 99 or 2000. It's not going to guarantee that, look, they're not going to get the return on capital, all of them. Why? Because they've had so much debt offered into the market. Of course, some of those companies, I said in the beginning, some of these companies are going to fail. A lot of them are going to fail. In lieu of jobs numbers, these are private numbers. So it's pretty reasonable to see in terms of layoff and from the earnings reports. Look at the amount of discussions that in technology about layoffs. I mean, this is from the earnings report. This is amazing. So I think the Fed is going to still cut. They have to cut. And if they don't cut, of course it's political, but it's always political. There's always a tone of that. That's just part of the way our government runs. So, job situation is getting worse. I had to laugh. I think it was Verizon announced 15,000 layoffs, and then within, I think, 4 hours, they announced, oh, it's going to be 21,000 or 20,000. So layoffs are coming. That's going to hurt the market too, in terms of when I say that. So if you get laid off, you don't have capital to spend, right? So you're cutting back. And that's happening in restaurants. Restaurants are getting murdered right now. People are cutting back. I don't think this holiday season is going to be a strong holiday season. So that headline may sort of hurt the market. But the market right now, in my mind, is in a precarious place. It doesn't have direction. Nobody's in charge. I think the head of, I think Goldman's desk said, on Friday, no one's in charge. There is nothing leading the market up and down right now. Coming out of Q3, earnings sentiment, this is good. Earnings sentiment handily rebounded. But that might be because of layoffs, right? So while it's good for the companies, while it's good for the S&P 500, not so good for the rest of us. The people who own the jobs, not for the people that are, or not own the jobs, are getting laid off, and not for shareholders on a shorter term basis. But I don't see anything. I don't see any cracks in the armor that are going to. It's not going to be an oracle. Even if NVDA shits the bed, that's going to be, I think, it'll drag the whole market down temporarily. But we've seen the sector rotations out of AI. We've watched them go into health. The XLV has been a big recipient of AI dollars, but these are short-term trades. These are purely algo-driven trades, looking at those ETFs or sectors that aren't as tied or inversely correlated to the AI theme and AI bubble. But yes, it's good to see this provides front-end guidance, and the market is also always trading with an eye to tomorrow, right? It's trying to price future events and future possible outcomes. So that's why stock prices go up. You wouldn't want to see this reversed. Then I would be telling you there's no shot for a Santa Claus rally. Okay. Speaking of restaurants, look at this. This is Goldman Sachs takeaway from their restaurants and finance conference in Vegas. The operating environment has worsened, particularly with lower and middle income people. Yeah, they're not going out to eat. They're saving their money. This is not, look, we're a consumer driven economy. So we need people to be going out to eat. We certainly don't need to see pullback on going out to eat and a pullback on the amount of money being spent at the grocery store because of higher prices. There is inflation, spot inflation though. Okay. It's not affecting every bit of every part of your grocery store. It isn't. Not at the levels that the Fed is concerned about. Okay. This is looking at some delinquency rates. Okay. This is looking across the US and it separates between the richest and the poorest zip codes. Well, if we go back, let me get the time frame scale. There we go. Here's 2008. Look at the spike after the 2008 crisis. Right? We're getting close relative, not on the richest 10% zip codes, but this is the entire US. This is the poorest 10% zip codes. These are getting fairly high because consumers have to tighten the belt. Also, because they took on debt that was stupid, right? Average car loan over $1,000 due to COVID cash. There's going to be rising delinquencies and there's going to be rising foreclosures or repos in the auto industry. I don't do a deep drill down in terms of credit markets and what particular credit instrument or debt instrument is rising in delinquencies because they're rising across the board. It's not at a level that I think that is unmanageable, but this is an artifact, by the way. I talked about a delay. This is because the Fed didn't lower rates when they should have been last spring. So that's exactly why this is happening. And they haven't been aggressively lowering rates since then. So this is that like sort of a wave function where there's this delayed reaction. Looking at the December rate cut odds, absolutely cratering. Okay. Well, that's what happens when you have four Fed speakers come out and turn hawkish. I still think there's going to be a rate cut. I don't know how big that rate cut will be. On Friday, Citadel, their top trader, summed up the day perfectly by reflecting on his inbox, which was 4 a.m. Eastern time to 9:30 a.m. Absolute fear. He puts out 10 a.m. to 11 a.m. We are so back, brother. And then dip buyers ramped the market back up in the green. Late day selling pressure on Friday left the Nasdaq lower along with small caps. S&P was unchanged for the week. However, take a look at this. This is right now the gamma. So we're in a negative gamma. So remember, negative gamma means dealers are going to chase rallies and sell-offs in order to maintain their neutral position in their books. So that's going to exasperate both to the downside and the upside any move in the market. That will eventually flip to positive gamma. But right now, we could expect any of these moves to be more extended purely due to dealer positioning and hedging. Okay. Taking a look at the Mag 7 stocks, it doesn't feel like it, but Mag 7 stocks they ended the week unchanged. Unbelievable. And that was a big bounce on Friday off the 50-day moving average. Will it hold? I don't know. I have to wait and see. We wait and see if we have a reversion to the mean, and we wait and see if we get any buyers into the market on Monday. I suspect that the market I think is going to do one of two things. The market's going to believe that NVIDIA earnings is going to save the market for the second, third quarter in a row, and drive it up, or the market's going to believe they're not, and it will drive it down. All focus next week's going to be on NVIDIA, which is sort of annoying because it makes our trade choices more difficult because we know that a rising tide and a falling tide carry all ships, even if you're not responsible for it. So your asset isn't responsible for it. NVIDIA is. But that's the market. We do the best we can do with the data that we have. Looking at, on Friday, by the way, the market was 1% better to buy. Hedge funds were 10% better to buy. Talking about total volume, notable demand across semis, software, and retail. Even long-only funds were plus 1% better to buy. Healthcare again, pharma, and equipment. Long-onlys are using the market to continue selling software and semis, which is what hedge funds are buying. I got asked, is there a rotation? The only rotation I see is a reduction of risk on professionals' books as they lock in gains and a rotation with some of that money into the XLV. In the past, that money was going into gold and silver. That started, we got into a trade, I think on Wednesday or Thursday,
were able to scale in one day, I think it was, on the silver trade. It didn't continue through the end of the week. So I'll be keeping a close eye on both the silver and gold trades because I do think from a longer term macro perspective, there's going to be consistent and continuing demand for both of the products. Momentum longs, which unbelievably they got clubbed like a baby seal. They came back. Look at this rip roaring rally back to end of the week unchanged. Why? Oh, a lot of us probably locking in gains on shorts. Some additional hedge going on counter to the market, especially if you're you're ripping back on your momentum longs. So, but having said that, the market is, in my mind, very precarious right now. It is not. I've been position sizing down. I've been at the 2% level, and I've been there for weeks, and I'll continue to remain there because I don't see any reason at this moment to just go, normal 4% position. This is the bond volatility chart. This is what I pay attention to. We didn't see a sizable jump in bond volatility this week, but we did see pretty sizable swings in equity. I'm sorry, the red is equities and the blue is the bond volatility. We didn't see a huge jump. So when I start seeing huge jumps in bond volatility because the bond market just dwarfs the equity market, that's when I do get concerned that maybe that there's an issue with, and it's not obviously with Oracle going on. This is even more encouraging to see underneath the surface. The largest market in the world, debt, is pretty quiet right now. There's not a tremendous amount of hedging to the downside going on. So very encouraging because the bond market will lead the stock market. This is Oracle CDS is just getting, Oracle's got a problem because the more the stock goes down, the more expensive their CDS becomes. That's credit default swaps, which are, layman's terms, it's insurance. So it's how much it costs to insure against default for the next 5 years Oracle's debt. Well, you would invert this, by the way, and that's how the scale works over here. It's getting quite expensive to do that. And the worse that this Oracle stock drops, the worse this is going to drop until and if something breaks. If it does, I think it'll be a week or so event where the market freaks out and says, "Oh, the AI theme is done." It's not done. Okay, there is a what would you call it? A whittling down of candidates within the AI theme sector that are the winners are being started to be grouped to one side, and the perceived losers are being grouped to the other side. I just saw Bitfarms. I was making a comment this morning that saw Bitfarms decided they're going to get out of bit farming as one of North America's largest Bitcoin miners, and they're going to move into AI business. Look, I, I wouldn't put a dime with them just because of that reason. They're changing their business. It reminds me of freaking Marcus Lemonis, who's constantly changing his business, right? Well, it's not like they flip a switch, right? It takes capital, it takes planning, it takes execution. So very concerning when I saw that. Let's take a look at gold and silver. Gold and silver, by the way, silver outperformed gold on the week, but this line here, they call it the ADX, was it the Maginot line, right off there, the French line of defense on the coast during World War II. Go look it up, you younger people. Pretty cool. But what this is showing is that the gold to silver ratio, there is much more upside in both gold and silver. Okay. Uh, I don't know when it's going to happen, but I always look at these because I want to know what the technical backdrop is because I know that algos and bots they do account for this type of data point. It has to do with their sizing. It has to do with how much ultimate risk they want to take on this particular asset class. So if it was up here at a healthy level, I would come back and say, I don't really think there's a technical support, technical now, meaning the underlying ratios of that particular asset for it to continue to move up. I see no reason. I see nothing like that for gold and silver. In fact, right now, it's supportive for it to move up. This chart is wicked. We had the largest BTC Bitcoin ETF outflows since inception.
So classic symbol of a bottom. I don't know if the bottom is in. I did see Michael Saylor saying he was buying all week. Well, he sort of has to because his stock is down 50%. So I don't count that as bullish. I think Bitcoin miners or Bitcoin and treasury companies, unless they can prove that they can make revenues beyond just buying the asset class. So it's not like a blind pool where they're buying, and hoping it goes up. Once they're able to prove that, and I don't think Bitcoin will, but I think Ethereum will. Uh, Once they're able to prove that, that's when you'll see a bit miner start moving to the top side. Now, we've been talking about in the Fight Club members that they found a 13F from Jane Street has just a massive BM&R position. Both puts, both calls. I have not looked at the filing yet, so I don't know what the strikes are. And they own common. At the very least, Jane Street can move BM&R around. They can move it around, which sort of explains to me why Tom Lee didn't come in and defend BM&R, because he's now aware that Jane Street's involved. So no, Jane Street's not where they are one of those firms that shorts things into oblivion. I mean, if they can, they will, but they have long calls, they have long puts. No, and that's, by the way, people saying, well, I think they're just hedging their risk. That's not the way they do it, though. I mean, you don't buy, that's a collar, effectively. That's a massive amount of money they'd have to lose on one side. I think the simpler explanation is they have built up such a position because they can push it around. So I would expect outsized volatility on the price of BM&R. My hope is that's to the top side. I need to be able to roll my BM&R and my Ethereum. We'll have to see. Bitcoin, like I said, broke down through a really crucial support relative to gold this week, with Bitcoin now trading at 13-month lows relative to real gold. Is this, why is this important? Because these are some of the data points that the algorithms and professional traders are looking at, because at the end of the day, they want two things. They want directional potential, but we all do this. We look at previous historical ratios, and that gives us a benchmark to be able to measure in a split second whether I'm buying the asset, it's expensive relative to previous history, or it's cheap. And so what this is saying, Bitcoin's getting very, very cheap. Assets can get much cheaper. We may look back in a year and go, oh, this was just a head and shoulder and we're all the way down here. I don't know. I don't think so, but it could happen. Anything can happen. Yes. Finally, let's look at our last chart here. S&P ranges. All right, pretty easy here. The S&P reclaimed the 50-day moving average, okay? But the 6,775 to 6,800 zone is the next area to watch as resistance to the top side. Because if we get above 6,800, there is very light position, so it's going to be much easier to channel towards 6,900. A breach below it, which we got on Thursday, risks paving the way for a much faster slide because we are in a negative gamma backdrop. Yes? Moving forward, systematic flows are going to continue to be a headwind, as I shared in my end of the days this week for my members, Discord members, that they are sellers in any scenario, CTAs and hedge funds, except for one on a monthly basis. If the market were positive on a monthly basis, there'll be buyers. Well, they were any scenario, up, down, or sideways, they remain sellers, though, for the next 2 weeks. CTA short-term momentum threshold is 67.25, which was regained for now. The next level to watch for CTAs on a medium-term momentum threshold is 64.42. Below 64.42, the market's going to have to absorb an automatic additional 32 billion of supply in a 1-week period. Retail investors continue to be the counterweight, but who knows how much dry powder they have left. They have a lot left. Seasonals should also help, with late November one of the best periods of the year. But even Goldman says, look, right now NVDA is the swing factor for the equity markets. Once again,
I don't think they're going to disappoint. I just, we got a member who used to work directly with Jensen Huang at that level for the company. And this guy is a winner. It's important to him that he would not be the reason why the market went down. So I think they're going to come in and I think it's going to be positive and I think they're going to beat. But I'm guessing, right? Let's look at the SPX 500. There's our shelf, 65.52, right? We're bouncing. I don't know if this bounce will hold. It's only been one day. I think it was a dead cat bounce, meaning it happens after a big red day. You have some buying come in, but maybe this will develop into this. I don't know yet, but I'm not going long this market on the index basis until we break out to new highs. Yeah, tremendous amount, not tremendous amount, don't exaggerate. A lot of consolidations going on the weekly chart up in this area. Two weeks ago, we got a confirmed high close doji. The last week was a retrace. They retraced almost the full range of the previous week, and we finished where slightly below the midpoint. We need to hold this level right here, 6,500. Hold that level, we're in business. Break above 6,800 on a close, then we're in business to the top side. But it's always good to put in perspective on a weekly chart because the daily chart, you can get very hyper focused on very short term time frames. Yeah. Looking at the NASDAQ market, same setup, right? We got this floor here. I've got the floor at around 24,000. I think we've got to hold that level. If we don't, then the market is going to go down. We're stuck between this channel right here to right here. That's our new battle zone. Once we break out of that zone, then I'll have much more confidence either to the long side or the short side. The Russell 2000 this week just got monkey hammered. And we're rebouncing right where I thought we would. That's that line. I drew that a while ago. So we could go as low as 2,300 before we start moving up again. Again, I don't know if that's going to happen. We'll have to wait and see Monday if we get a reversal off this Friday candle. Looking at the QQQs, very similar to the NASDAQ market. We have still, this is the first initial support level. And if we break that, we're going to come down to here to here. Top side resistance remains at 637. So we need to break out the new highs. We're right now 25 points away from 637. What does that put us at? About 6% away. I'm not concerned. The market, to me, this is a healthy pullback, and it sets up nicely if the market is going to rally. Yes? All right, let's take a look at some individual positions that we have. VTR. We got into this Ventas Realty. I think we did not get a scale off. We're up 30%, so I'm looking to scale out of that. Hit a new, I think that's a 52-week all-time high. But we got into that on Wednesday. Actually, Thursday, it went up that day, and then Friday was an even stronger day. So great trade for us. Not a great trade for anybody who sold it short. Tesla, Shaner stock, piece of crap. Just needs to hold 400. If we don't hold 400, this thing's going all the way down to 340 to 350. So that's where I'm at with Tesla. SU, Suncor Energy. We have instituted a new time stop on this. So if we don't get a scale on this within the next 2 days, we're down 8%. We're out. I'm not going to hold it. It can break up here within the next 2 days, or we will be flat this trade. Silver got monkey hammered. I scaled. I am now only break even on my runners. So either I get a bounce on Monday or I will be out. It has absolutely triggered my stop. So either we get a nice run up or I'll be out. It's okay. PCT, dead cat bounce. I want a short PCT. I'd like to short it all the way down to at least $8. That's where I think we're headed, unless we get a reversal at this level. PCT, I think is just it's not a company that's going to go out of business. It's just a stock that's going to look like it's going out of business. But I love the management. I've wanted to get long. We were long on a lotto trade. Okay.
And our thesis turned out to be good. We were right. We just exited a day early. It happens. NVIDIA, we already talked about NVIDIA. Looking at INV, I'm going to hold my commentary on INV until after Mr. Reyes and I do a podcast because we're going to talk at length about it. I do want to make one note about INV, which is they started to offer options on Friday. And yes, my members and I went into those as starter positions. We're not even close to what we would like to get. And of course, we never work in collusion. Okay. I put out trade ideas. I have no control if somebody decides to take the idea or not. And quite honestly, they don't take all the ideas I do. They trade their own plan. So I wish they did. Took every single trade. That'd be pretty cool. But I'm already long. I bought Common weeks ago. I'm already long via calls. I intend to buy more calls. But I'm going to wait. Really, Mr. Reyes has done a tremendous amount of work on it. So I'm going to wait till he makes a commentary in our podcast. Google, look at the beautiful channel we're stuck in. Let's see if we get back up in the channel and bounce off this original break level. Okay. I want to get long Google because Google's held up very, very nicely. NVX. NVX, I want to short. There it is. There's the line. I want to short the stock because I don't see, absent a surprise news announcement, I do not see how they possibly have anything that will positively move the needle of the stock. NFX, I think, is a dead stock until January at the earliest. If it goes up, it's going to be going up because of the dash for trash. That's the only reason it's going to be going up. And last year, y'all probably don't remember, I did a naughty and nice list. Well, there were 3 candidates. NFX was on the naughty list. BBBY was on the naughty list. Look at that piece of garbage. Yeah, I'd like to short this too. Maybe I'll do it on Monday. EOSE was the only stock on our nice list. Well, how we doing? Even with this big drop, holy crap, we're doing fantastic. Because I think the stock opened up at around 340 or something. EOSE, I believe there's an offering coming. That offering is done, or for me, I can't do anything with the position. Now, meaning I can't take new trades, add more risk. I did that a week and a half ago. That's fine. I did that. I think I'm I'm whopping down 5% on it. Whoop-de-doo. I have been teaching my members about what I call a house money trade, which is if you have common stock, how to use the common stock to get free upside exposure with no additional principal risk. Yeah, you got to be a Discord member to hear that. So tough tooties. But why do I think this happened? I think that if I'm right about my thesis that there's an offering coming and they need an offering, they got to pay for more lines in order to meet their backlog of orders. This, I think, was a tremendous amount of front running that went on. And I think they got caught because nobody expected the market to have such a large downdraft. But looking at the volumes in the stock, other than Friday, we had been consistently trading at 2x the average daily volume on this. So that's not retail. That's institutional dollars. Looking at some of the trade size too, it was pretty evident to me that this was what I call whales getting into the stock. Do I think they have sold the stock? No, I think there was some healthy profit taking going on. But if I'm right about an offering coming, I think there is uncertainty around what the pricing would be. Maybe, I don't know. I honestly don't know. First, I don't know if there is an offering. And second, I don't know what the pricing will be. I do know that I'm going to wait at the very least for a bounce and a reversal. But because I'm so strongly in the belief that an offering is coming, I wait. I'm already at 30%. I don't need to do any more trades. Yes. I haven't had time to update the overall portfolio. I don't know. I think I'm still up like 90, 91, 92% for the year. And that would put me at 540% over the last 2.5 years on a cumulative return. I think the name of the game remains, unfortunately, what it has been for the last couple of weeks, which is you sit on your hands. What I'm doing is sitting on my hands. I'm reducing position size. I'm doing a lot of research, and I'm going to take a couple weeks off too. So if I'm doing it, I guarantee that other professionals are looking to do that too. So that has either the effect of adding additional volatility in the market, or the market gets more quiet. We're going to know a lot more after NVIDIA reports. I think it's Thursday. We're going to know a lot more about the market direction and where we think the market is headed. Additionally, I don't think the Fed has a choice. I think they're going to cut rates. If they don't, I think the market will throw a tantrum, and the bond vigilantes will step in. And the effect, what they'll do is sell off the debt and force rates down, that, from their perspective, and the Fed will have to follow. So the Fed's in a tough spot. Um, we only have, what, 6 more months of the idiots in the Fed, because Powell will be done in May, and Trump will be able to get his people in there. Um, I hope you had a great week. I know I took last weekend off, much needed. Spent some time with some good friends. I think that we've got another 1 week of good trading, with regular average volumes until the week of Thanksgiving. And then the week of Thanksgiving, there's not a hell of a lot to do. Don't get cute. I mean, I don't get cute. A lot of people think, oh, I'm so, what happens is they get bored. And so they start doing stupid trades. You're so close to the end of the year. I'm not skating. I'm not just sitting here, going to coast into the end of the year. I'll continue to trade as I always have. If the probabilities and the statistical analysis say it's a worthwhile trade, I'll go in. But I have been globally cutting down my position sizes, where normally I'd be at a max 4% position size. I'm at 2. I'm not willing to add the capital. I guess that's sort of a reverse way to do protecting my gains. If I have to decide on my BM&R and Ethereum, I may just sell those and take the capital loss, because I have such massive gains this year. I need the tax offset, but that's secondary to my trading, because that's true portfolio management. And to avoid the wash sale rule, thank you, Mr. White. I got to hold it, I think, for 30, or I have to stay out of it for 30 to 31 days, and then can go back in and buy it, which I absolutely will. I will absolutely go back in and buy it, because I do believe the long-term macro picture on it. My mistake on BM&R and Ethereum is I didn't buy enough time. I made multiple mistakes. I overpositioned size because the contracts were so expensive. So I wasn't able to get the number of contracts that I wanted. So, what's more important to me than price is the number of contracts, because that affords me the ability to scale as it's going up. The first freaking day we owned that, it was up 83%, and I couldn't scale. I only owned one contract in the model portfolio, okay, according to my position sizing rules. So that was the first mistake, is I wasn't able to get that flexibility, because when you only own one contract or even two contracts, it's an all or nothing trade, right? Every day you're making decisions, all or nothing. I don't like that. Those binary decisions are not the type of environment that I do well trading in. I don't know anybody who does well trading in those. I had a member ask me this morning, do you still think Ethereum could hit 5,000 by the end of the year? Yeah, I do, because it moves like that. I think there's some headwinds right now. I think Jane Street and BM&R's headwind. If they don't lower rates, that's a headwind. So I think there's multiple things. I had made the comment that, hey, as soon as the government opens, I need Ethereum to start moving up, or I'm out. Well, that was a great plan. I didn't have a chance to execute the plan because the market went down the day after it reopened, and it dragged everything down. I mean, I got massive, not massive. I have percent size. I'm very, down 75, 80% on some of those contracts, at least on my 2026s. It doesn't concern me. Drawdowns are part of what happens. The same philosophy and analysis that I use to get into BM&R and Ethereum is the same analysis that I use to trade EOSE over the last year and a half, which, for those of you, keeping score at home, my members and I have made just massive amount of monies. And I'll share this. The people following my methodology, the members, 7 of them are brand new millionaires this year. I have 5 people now fully retired. 66 team members now? That's incredible to me. And I would say out of them, about 80% are professional level traders now. It's a lot of fun when you're making money using a methodology. Means that at least you have a roadmap for the trade. And if you obey the rules, you know that the rules are set up for protecting capital. It's a lot of fun when your friends are making money and you're making money. You're monitoring risk. So these drawdowns like you had last week in the market don't really affect us. because we have so much cash right now. So we're in a good spot. We're just waiting. We're waiting for the technical picture to clear up, which is going to be based on NVDA and interest rates. No way to predict it. So we're just standing aside. And when there's good opportunities, we're taking those 2% trades and moving on. All right. Well, I hope you have a wonderful weekend. I am doing a podcast with Mr. Reyes that will drop sometime on Monday, and pretty excited about that. We'll be going over EOSE. We'll be going over, well, I'll just hold it. We're going to go over a couple new ideas that we've got and that he has. And then I'll have a weekend update for next weekend, and then I'll be off the week of Thanksgiving and back at it. Hey, I want to encourage you, if you haven't had time to visit the Discord, please reach out to me. Yeah, it's $50 a month, but $50 a month, the majority of them are already paid for, months upon months, because I send out ideas, great ideas. Yeah. That's part of the Discord now. You get 2 to 4 trade ideas a week, 2 to 3 actually. Not guaranteed. They're not. They're meant for education, but those that do decide that they want to learn, or my belief is the best way to learn is with real money. Okay, they've been doing well. So if you are interested, please message me. And otherwise, I hope you all have a very safe and a very blessed weekend. Thank you very much.
So I'm about my business and I'm running with it now. They don't wanna give it up, we gon' make it out. Get it while I'm living. All I ever hear is the clock tick, tick, ticking. So I'm about my business and I'm running with it now. They don't wanna give it up, we gon' make it out. It don't get no greater. Feel like I'm on fire. Feel like I'm Johnny Storm. Feel like I'm volatile, explosive. Get close enough, you'll notice. Your girl act out of character when she see me approaching. Ain't poaching, I'm just saying it's nothing.